Hi everyone, I'm Shruti and welcome back to G2Financetech's weekly market update. Your go-to source for key market movements and what they mean for investors like you. This week, markets navigated a legal tug-of-war over tariffs, softening inflation signals and fresh hopes on global trade fronts. Let's break it down, starting with the US. United States legal rulings and rate signals. US stocks bounced back over the holiday shortened week, led by the Nasdaq, which rose 2.01%. The S&P 500 gained 1.88% and the Dow added 1.6%. Markets opened strong after President Trump announced a delay on the proposed 50% Europe import tariffs to July 9. Later in the week, a court ruling against the administration's authority to impose global tariffs further boosted sentiment until a federal appeals court temporarily reinstated the tariffs, paring gains. Inflation cooled as April's core PCE index rose just 2.5% year on year, the slowest pace in 4 years, though still above the Fed's 2% target. The Fed minutes flagged persistent upside risks to inflation, especially from trade policy uncertainties. Consumer confidence jumped, with the Conference Board Index rising 12.3 points to 98. A de escalation in trade tensions between the US and China helped lift expectations. Treasuries also rallied after the initial court ruling on tariffs, while high yield and investment grade corporate bonds gained on positive flows and sentiment. Europe. Relief rally and mixed economic signals. The Stoxx Europe 600 rose 0.65% as Trump postponed tariff escalation. Germany's DAX and Italy's FTSE MIB led gains, while slowing inflation in France, Spain, and Italy lifted expectations for an ECB rate cut in June. However, consumer inflation expectations remained high. Germany's jobless rate ticked higher, and UK services sector confidence fell to a 2.5-year low amid rising employment taxes and weak business volumes. Japan. Trade hopes and policy caution. Japan's stock market rallied on trade optimism, with the Nikkei gaining 2.17%. Positive signals from Trump and Prime Minister Ishiba ahead of G7 talks raised hopes for a US Japan trade deal. Tokyo inflation accelerated to 3.6% and unemployment held steady. Bank of Japan Governor Rida reiterated a cautious stance despite stronger inflation data. Industrial production dipped 0.9%, but less than expected. China. Stimulus hints amid trade pause. Chinese stocks edged lower despite a pause in US trade actions. CSI 300 and Shanghai Composite slipped, while Hong Kong's Hang Seng dropped over 1%. Focus shifted to stimulus measures, with Beijing planning a RMB 500 billion infrastructure boost via state policy banks. Reports indicate the next 5-year plan may keep manufacturing central to China's economic strategy despite global criticism. The government aims to support demand as a temporary truce with the US nears expiry. Our take. This week showed how swiftly sentiment can shift in response to trade headlines and legal rulings. As uncertainty lingers, staying diversified and focusing on the fundamentals is more important than ever. At G2 Finance Tech, we help you navigate these waves with informed insights and grounded strategy. That's it for this week's update. I'm Shruti, and we'll be back next week with another global roundup. Until then, stay informed and stay ahead.